Well, many newer financial technology stocks are yet to turn a profit. That's perfectly normal. But your next guest says that the company called Toast is on a path to do just that, upgrading the stock to a buy. Let's bring in Dan Dolev. He is managing director and senior analyst at Mizuho. Dan, welcome back. I actually interviewed the founders of Toast when the company was still private. And for our viewers that don't know, and please correct me if I'm wrong, this is like a company they might be familiar with at restaurants, right? The handheld payment devices. They've got software that connects to that, takes orders, payment processing. But they're also much more than that. They're getting into working capital loans. They're getting into kind of information software as a service. What about Toast do you like? Because the market has not liked the stock.
Thanks, Dave. Thanks for having me on the show again. I mean, Toast is a massive share gainer. We're seeing them gain share across the board. And what we like about them that the market doesn't like is people don't think they can be profitable. We ran a survey of 55 restaurants, and what we found out is that people that take payroll are actually more likely, twice as much likely to take other software and services. And if you think about those incremental margins, they could be like in the 60s, they could be even higher. So the bear case on Toast is that they can't make money. What we say today is if they continue to upsell, payroll, SaaS, et cetera, over the next, 12 to 18 months, they could actually turn a profit in 2023, which is not in consensus right now.
So, Dan, its primary customer is the restaurant business. I'm wondering how you think about and how you model out a recession in 6 to 9 months and the various base case scenarios for a recession in which restaurants may not survive and there may be cuts at restaurants.
So there's actually two views. That's a great point you're making. So we weren't making a macro call, and obviously if we hit a recession, there's going to be a lot of things to short out there. But the way we looked at it is there's two ways to think about it. Like there's some of the restaurants that are not going to survive. But if you think about where Toast is heading, they're heading deeper into enterprise. They're heading deeper into sort of bigger restaurants. And I think those restaurants tend to be more resilient over time versus like the very, very small end of the SMB, right? So they're kind of morphing away from where they used to be, like where Square operates normally, and going into deeper, bigger restaurants. So I think it's not like we're not modeling a recession, per se in the numbers. I don't know how it's going to play out, but I think there's some resistance there given the size of the restaurants and the depth of the SaaS products that they're attaching to it.
How hard was it, Dan, to make this call? I mean, you could have easily just sat at a neutral in this stock in an environment in which even for companies that see a path to profitability with a recession looming, that path is a little bit more uncertain, and the market doesn't look favorably on high multiple, non-profitable companies, and that's basically where Toast falls.
Yeah, no, I appreciate it. It was a very bold call. And, I think on our team, we thought a lot about whether or not we actually want to do it in this environment. We couldn't just sit there looking at how much share they're gaining and how well they're doing. You see them everywhere. I mean, you're seeing them taking share across the board. We actually have a chart in there in the presentation. They're actually taking most share from Square. We couldn't just sit there, watch it, and be neutral on the stock. It's just too good. I mean, they're just executing so well. It was a screaming buy, and once we saw the data on the SaaS, we were like, it's a buy. So we're taking the risk on the macro, but I can't predict that.
Is there a takeout premium that should be built into this stock at some point, Dan? There's so many of these companies that popped up. Every time you go to a restaurant, it feels like there's like a different vendor because we look, right? It's our business. Is there got to be some sort of a buyout put on this company?
100%. I think that if there is that's actually what makes it such a great stock in our view to buy, because if things fall apart, let's say, there's always someone like one of the legacy guys that's going to want to take them out, right? So there's definitely a put on this one. It reminds me a lot of like Robinhood, right, which we cover. So there's a put on Robinhood, and that's what made it so resilient, because there's a lot of people who are interested in buying Robinhood if things kind of don't go the right way, which they are right now. So I agree with you on that one. It's the best in class. It's like the Apple of like restaurant point of sale.
Dan, great to speak with you. Thank you.
Thank you.